choppy nature of the crypto market wins again. We just got a long wick to the upside, came back down, that candle closed to the downside. So we just have an engulfing candle with the last 24-hour close. That's not good. So you're getting rejected at that level of resistance, one. Two, you're trying to make a double top, which would be like this on a price structure basis, at a time when the RSI barely tried to put in a higher high. So that's like hidden bearish divergence coming in. So if the price slowly come back down to 0.48, I would not be surprised. This is just for XRP. Because on the other aisle, you're watching dollar, which actually broke to the downside, is now trying to come back up. That's one of the reasons why Bitcoin is coming back again and again to retest this range of pattern which we broke recently. But keep one thing in mind. The market is clearly showing you one direction. And if you use that correctly, you can overcome a lot of what you see in the market. The moment you understand, like, okay, things are not looking good, and the way you look at this, it's literally made that way. So the majority won't take part in a huge market cycle. When we say a huge market movement, we're talking about something big. What do you mean? You're starting to form a pattern like this. We are almost on line with that. We've dropped here. Now we are retesting a rejection there to make a higher low is what we want. Afterwards, boom, you slowly start to take off. Don't believe me? Come check this. We broke to the downside. We went back up. We are retesting that range to get rejected, or at least as of now, we're getting rejected, forming a higher low and bouncing back up would give you an enormous amount of ROI in this run up. But the governments don't really want you to participate in this life-changing event, and that may not last a long period of time. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. So this asset we posted like 3 weeks back, right? Talking about what we are looking at. And here we are talking about this is a long-term trend line support that's valid all the way from 2022. So if you are just a student of the market, you would argue, okay, as soon as there is a breakout here, that's my next leg to the upside. And what happens? The price shows you something similar. You respected that trend line. You broke to the upside, retested, boom, you went up. So the price structure, if you're paying attention to that, gives you a clean idea. Now, yes, say we are all students of the markets, right? So if you do look at this and say, okay, I'm someone who follows the Wyckoff, fine. That's a clear breakout, retest, reaccumulation, a long one, and now bouncing off. That's actually good. That's perfect to be in that side of things. One of the things you have to note is, okay, where we are, how much upside do we have in that time horizon? Then you slowly move on to a weekly and you're like, whoa, that looks promising, right? But you don't want to enter into an asset right after it pumps. You want to enter into an asset before it does. Yes, that means we don't know when exactly it's going to pop, how many candles are going to be there before it pops, all of that's sure. But you get to make this in your portfolio. Whereas once you enter after such a pop, now you don't know whether it's going to go down first to retest this range before you bounce back up. That's why the SI family has the advantage in the market. That's one of the reasons why 1,000+ members are there in the SI family. Now, we had followed it up. We had given you the targets. Target 1 is already hit. Now we are going towards the target 2, somewhere close to that range. So if you actually look at the market now, you'll actually notice the fact that you came almost close. That's why I say if you have the measured move, buy 80% of that, take your profits. We repeat this in almost all the one-on-one sessions. Now, getting back into the market, the reality of what we can see here. There is a fake out for sure to the downside in the dollar. And it shows you it can slowly push back up to test this level of resistance, which would be 105.8. Say you even wick to the upside, right? That can be close to 106. And right now you stand close to 105. So yes, that's just a dollar movement, but you need to keep an eye on this RSI. Are you going to trend back to the upside or are you going to get rejected? That is important. On the other side, you're looking at the Bitcoin. Bitcoin bouncing off after a retest here in this pattern will allow you to say, okay, we're getting this choppiness. Now, this is what we would like to see or love to see, because this would actually create another structure here, which would look like a clear inverse head and shoulder, which is fine, which is a reversal signal. Now, on the altcoin market side of things, we saw, we have a 30% drop. We already understood the fact that last time when we actually dropped, we had a decent 18%. This time it's 30%. So it's been bigger. So the volatility in the market is increasing. And if you go back and see that, you'll understand the fact that, volatility has been a part of this market. This was 17% drop, after which you dropped 31. So again, you had 16 here and now you have 30. So, I mean, that's almost close to what we have seen in the past with these kind of drops. So, don't panic. You don't have to. If you do understand the logic behind which direction we are going, from a historical perspective, one thing for you is clear and sure. You will have these drops, which are not small. 30-40% drops will create panics. And one of the things you need to keep in mind is, especially if you enter after the market pops like this, there should be some level of correction coming in at some point. That's a surprise factor. And that's one of the reasons why from October we've been saying, as we were riding higher, there is going to be a surprise factor. The market has been highly predictable. There should be something. And right now we are watching that choppiness, that slippery slope kind of thing in the market, which is slowing people down. Because if you are not looking at the price structure, trying to understand, okay, these are the highs, these are the lows, it kind of gives you the direction. Say you look at XRP, this is one of the easy part there. You actually look at it on the shorter horizon and you feel clearly, okay, this guy should actually drop back down to at least this level. That's good. Now, you zoom out on XRP and you're like, okay, we had a major drop for which the support level is here, 0.47. So coming back down to that range is okay. But the next level is 0.41. Now, yes, we came to that point just before bouncing back up to the range where we are now. And if you do look at this, almost similar to what we just saw and discussed about in WTK. Look at the price structure, right? You have this, if you are calling it as a Wyckoff guy, you would actually call this as a breakout, reaccumulation, and a burst. So when you compare it with this, you have somewhat a similar price structure. If you do compare it, you'll actually argue, okay, this is what happened here. We broke higher, we retested, we consolidated, not respecting these levels, but coming down deep into the range and then went back up. Okay, if that's possible in the market, where are we now? What are we doing now? In terms of XRP, right? We came doing the exact same thing, had the long wick to the downside. Now, even if the price is to actually do this, I would still be looking for such a move. We just had similar price action. So if you are a guy who looks at the TA saying like, okay, this level is important, you came down to this portion and you broke back, and before that you had a long wick to retest the local lows. If you had to do that, it's going to be again choppy. It's going to actually kick out a lot of levered trades. It is going to be painful for those who don't have a long-term bag. So if you don't have a proportionality based on what you have on the long term and the short term, it's going to damage your portfolio. If you have 5, 10, 15, even 20% of short term bag, that's okay. Now, if that short term bag after trading becomes bigger, that's a different story. You're not touching your long term bag. You're not destroying that. You're allowing it to go through the volatility and ride to the upside. Now, the same XRP on a weekly shows you this story. We had a very long wick, which is still respecting this range. So the moment you actually zoom out, the clarity is much bigger. But what's the trouble there? When you do reach a monthly, you're still struggling. You don't actually have a momentum to the upside. Yes, it is true that this particular candle is live and it's looking fine. But you don't have the momentum to come back up to test this level. You're still slow. So that's where I say you go back into the market, look at which direction the money is moving, and once you understand that, use it for your advantage. Maybe it's an asset which you entered back and the price dropped. Now it's forming a negative divergence. It's an exit time. You don't want to load more up. Rather, you want to use that as an exit. Maybe I'm wrong, but remember the gas discussion which we had a few months back? Yes, it did another candle to the upside and slowed down there. But if you notice this, the argument is still valid. The price went up, but the RSI didn't. And that's one of the reasons why I was saying we may see 40-50% drop. Here we are, we actually got close enough, right? So that being said, one of the other argument you'll have to make there is that you have a trend line. Perfect. Now you're below that trend line. Have you seen something similar in other assets? If so, that is a lesson for you, right? Say I think it's Quant, which actually will show you somewhat similar trend horizon and what happened afterwards, right? This is important. The price going up on a macro trend line, then breaking it to the downside after a gigantic run to the upside, that matters a lot. So when you're in the market, understand where that asset started from and where it came to. At that point, you'll realize, okay, I shouldn't be buying the top when others are trying to sell. Because if you are a logical guy, what you would do is like, okay, this is somewhat something like this happening. Till that point, you had a clear trend to the upside with higher highs ranging clearly. Now it doesn't look like that. Yes, it is true that this is forming, which is a hidden bullish divergence and the reset of this level. So any bounce, in my opinion, would be an exit by this range. What if that's going to be a head and shoulder pattern, which may break to the downside? It's going to be bad, right? So these are all different perspectives in the market, but you should make a decision which is logical for yourself. If you do recognize that any pattern which you say you are a guy who's following the lows and you want to make sure you're not buying at the top, rather you're buying close to the bottom. If that's the case, this is where you want to buy. That's a different story. But then the question becomes like, okay, fine. If that's where you are, that's who you are in the market, then you're looking for the top like this. You extend this on here and you will put your argument. Okay, if it come back up, there is 100% to the upside. But what's your downside? I mean, investing or trading is actually based on that, right? What exactly is your downside? If you're looking for 100% to the upside and you're willing to lose 60 as a trade, fine. But the moment you realize that this support is broken, this is not going to be what you will be watching. It's going to be somewhat like these levels, which would be terrible. You go on the monthly and ask yourself, the monthly chart, now maybe I'm completely wrong, I'm an idiot. Fine. But when the monthly chart shows you negative divergence, I haven't yet seen an asset which went skyrocketing after that. There can be fake outs. We have seen some where it traps retailers and go back down. So choose wisely. That's one of the reasons why we go through the red flags, the opportunities, and everything else in the SI family. And if you would like to join the SI family to get the benefits of whatever I'm posting there, you can use this link in the description below to reach me in YouTube, or it's in the bio on Twitter. So guys, if you received value for your time, smash that like button for me. I'll meet you, all of you guys, on the next video. Bye for now.